Today we are diving into a penny stock that has the potential to make you rich. This is not a random stock picked out of hype or noise. This is a company with solid fundamentals, a promising future, and a growing base of institutional support that includes analysts who see long-term value in its current trajectory. If you're serious about making money in the stock market, make sure to watch till the end, and remember to subscribe and turn on notifications so you never miss an update on the hottest stocks in the market. The stock we're talking about is Vor Biopharma Incorporated, trading under the ticker symbol VOR on the NASDAQ exchange. Vor Biopharma is a clinical-stage cell therapy company on a mission to transform the way cancer is treated. What sets Vor apart is its unique approach called patient engineering, a proprietary method of genetically modifying healthy cells to make them resistant to targeted therapies, allowing for more aggressive treatment of cancer without harming normal tissues. This dual strategy, protecting the patient's healthy cells while simultaneously attacking cancer cells, is both innovative and potentially revolutionary, setting Vor apart from the crowded field of oncology-focused biotech firms. What makes Vor Biopharma even more compelling at this moment is its recently announced exclusive license agreement with RemeGen Company, a biopharmaceutical company based in China. This partnership centers around the development and commercialization of a drug known as telitacicept, a recombinant fusion protein that has already demonstrated clinical success in China. Telitacicept has secured marketing approvals in China for multiple autoimmune conditions, including generalized myasthenia gravis, systemic lupus nephritis, and rheumatoid arthritis. With proven clinical efficacy and regulatory validation already in place, Vor's acquisition of development rights outside of Greater China positions it to capitalize on an already de-risked therapeutic asset. That's a rare advantage in the biotech industry, where most early-stage drugs carry high clinical and regulatory uncertainty. The financial structure of this licensing agreement adds another layer of strength to Vor's outlook. The deal includes upfront cash payments, potential milestone payouts, and royalties on future sales, terms that bolster Vor's balance sheet without relying on dilutive capital raises that can erode shareholder value. This non-dilutive funding is crucial for a clinical-stage biotech company like Vor, which consistently incurs high R&D expenses while working toward eventual commercial product launches. The capital infusion from the RemeGen deal helps Vor extend its operational runway and focus on executing its broader clinical and commercialization strategies. Vor Biopharma's most recent financial report provides an important snapshot of where the company stands operationally. For the first quarter of 2025, Vor reported an operating loss of approximately $33 million, driven largely by research and development expenses totaling $26.7 million. While these figures might seem daunting at first glance, they reflect the nature of being a clinical-stage biotech firm. The company is heavily investing in its future, pushing forward on multiple fronts within its pipeline, and aiming to generate long-term shareholder value through eventual commercialization. Biotech investors understand that high burn rates are part and parcel of innovation in this sector. The key metric is whether these losses are funding meaningful progress, and in Vor's case, the answer is a clear yes. The company's current stock price is around $2.21, and while some analysts may see this as a speculative valuation, others recognize it as an entry point for a stock with meaningful upside potential. H.C. Wainwright, a firm known for its biotech coverage, recently upgraded Vor Biopharma to a buy rating and set a price target of $3. This bullish outlook is based on the company's expanding pipeline and the strategic value of the telitacicept licensing deal. Analyst Swayampakula Ramakanth, who issued the rating, sees the combination of innovation and partnership as a sign of strong execution that could lead to long-term gains for early investors. However, market sentiment remains divided. According to a compilation of forecasts from 7 Wall Street analysts in the past 3 months, the average 12-month price target for Vor Biopharma sits at just $1.18, with a wide range from a low of 30 cents to a high of $3. This divergence in projections reflects the inherent volatility of biotech penny stocks. The lower estimates are likely driven by near-term financial concerns and the company's reliance on continued capital infusions, while the higher targets recognize the upside potential if Vor's clinical and commercial strategies begin to yield results. What makes Vor a particularly interesting play is its potential to become a partner or acquisition target for larger pharmaceutical companies. With its proprietary cell engineering platform and the newly acquired rights to a validated autoimmune drug, Vor sits at the intersection of innovation and opportunity. Big pharma firms are constantly looking for early-stage technologies to supplement their pipelines, and companies like Vor with differentiated platforms and market-ready assets are prime candidates for partnerships or outright buyouts. Well, that concludes our list for today. Vor Biopharma stands out not just because of its low share price, but because of its intelligent business strategy, its scientific innovation, and its increasing appeal to analysts and potential partners. It's a rare example of a penny stock with true depth, one that offers investors a ground floor opportunity in a company working at the frontier of cancer and autoimmune treatment. If you found value in this analysis and want more deep dives into high-potential penny stocks, don't forget to subscribe and hit that notification bell. That way, you'll always be first to know about the next hidden gem in the market. Thanks for watching, and we'll see you in the next one.